2023, what a year has been. But now as we walk into 2024, here are my 4 key lessons that I learned this year and that I think will be the most important factors in your trading career for the upcoming year. So of course, we all should have New Year's resolutions. We should all take a moment as the year comes to an end to reflect upon everything that we've achieved, all of our shortcomings, and then moving forward as the new year comes, it's a time to question our ambitions and what we are chasing, reconsider what is most important in our life, and most importantly, not just have a list of goals, but exactly how to get there. So as I go into my 8th year of trading, and remember, I've never had a job, I'm full-time trading now, living in Dubai, and trading is always going to be a fallback and a focus in my 20s and probably even my 30s. So as each year comes, I learn more, I achieve more, I refine more, I gain more market experience, market IQ, and in that whole process of complete immersion, that's where mastery unveils itself. That brings me on to the first tip that I'm actually going to give, which is the importance of having a predefined plan and also systems in place for when things go wrong. The analogy I like to give is when I was in dental school, when I was in university, when we were learning about emergency crisis, for example, if a patient passes out, if a patient faints, if a patient is having a seizure, we had systems in place to preemptively forecast a problem and put measures in place to prevent it. Then if the unfortunate did happen, we had systems in place to know exactly how to react and operate and also to make sure it doesn't happen again. So let's say a patient passed out. I wouldn't be then stressing and thinking, okay, do I call the ambulance or who do I call or what do I do? And then calling for a nurse, and then that would be chaos. When you're in an emergency crisis, when you have your emotions spiked, when someone's life could be on the line, to then use your mental cognitive function to decide and make critical decisions, that is time detrimental. It is not the situation where you should be trying to forecast and plan and execute the best scenarios. That should be predefined. So the same comes to your trading. You should have systems in place. In the book Atomic Habits, he says exactly this. The most important thing you can do for your success and achieving your goals is actually falling back on your systems, because motivation is fleeting. All of these things that are external come and go, but your systems will be your fallback on. So the same comes in your trading. You should know exactly what you do if you have a losing streak. You should know exactly what you do if you trade with emotion. If you took a trade that was based on greed, you should have a debrief plan. If you're going through a winning streak and that's a positive, you should also have a plan in place. Whatever situation may arise in the live markets, whether it's emotions, whether it's things that were out of your control, whatever is happening in the market, you should have a plan that is predetermined as a fail-proof system, so you know exactly how to act, exactly what to do, that does not require cognitive function and that does not need you or require you to have critical decision making in a heightened state, in an emotion state, especially when you have large capital and you could potentially lose tens of thousands of dollars by making incorrect decisions. You better have plans in place, especially if you want to take this professionally and especially if you want to make a career out of this. Now, one of my favorite systems that I put in place that I can speak anecdotally of, which I've done multiple videos on because it was such a breakthrough moment for me, was understanding the nuances of profit management and how to optimize that for data. I'm not going to speak about it fully because I've done an in-depth video on that topic, but it's important because I didn't want to have taking profits something that is subjective, that requires my discretion based on price action and based on my emotion, because I'm blinded by a small sample size, because I'm looking at it on a one trade basis and I'm optimizing for one trade. When in reality, you should optimize your trading profit taking for your whole portfolio. It should not be on a trade by trade basis, because on certain trades you might be optimized and on other trades you might be sub-optimized, and it's only when you zoom out and look at it from a macro, analyze all of your trades, is when you realize what was the most efficient decision for you. So when I did that whole process, what I realized was the best system I can put in place is a fixed partial protocol system. It requires no emotion, it requires no thinking, it requires no price action understanding of where is the most logical place to take profit. I have fixed my profit taking and optimized my profit taking based on my data on what was the most profitable place over 1,000 trades to take partials. And for me, that was at a 1 to 3 risk reward, I take a partial, and at a 1 to 10 risk reward, I take full volume, nothing else. Now, certain trade might go to 1 to 30 and I lost out on that potential profit, but there was also so many trades that went to 1 to 3, 1 to 4, 1 to 5 risk reward, and I didn't take a partial because I was waiting for the 1 to 10. So it's only when I optimized it and took partials earlier on that took me a quick win. That was where I had such breakthrough in my profitability, where I was already profitable before, but I didn't have to change my psychology. I didn't have to change my strategy. I didn't have to change my mindset, my win rates. I had to change nothing, and my profitability increased drastically just by optimizing my profit taking methods. And the real power for me was when I realized that I can be wrong in my trading. I can be wrong all week in my trading, but so long as I'm capitalizing on these small wins, remember my stop loss is 3 to 7 pips. That's my rule, 3 to 7 pips. So for me to get a 1 to 3 risk reward, I need 10 to 15 pips, which is super achievable when you have a small stop loss. You're trading away from an inducement. You're trading with the volatility of the session. It's so easy to catch 10, 15 pips to the point where price may then reverse and you might go the complete opposite way, but I can catch these small wins that'll give me my 1 to 3 risk reward and be wrong and still take profit that pays for my next trade. And it's happened to me many times where I've been wrong all week. Nothing happened that I expected the whole week, but I'll still be profiting 4 or 5%. Why? Because I took these small wins and compounded them. And that brings me on to my point number 2, which is my objective in trading was to capitalize on big moves. My goal was pro trend swing trades, trading with the market and going for these big wins. And when you start out trading, it makes sense. You want to be aligned with high time frame. You want to have a larger stop loss to give you breathing room, and you want to catch big swings. You don't want to be focusing on small price action. And I get it. I've been there. But what I realized through my data and through my emotions and through studying and through optimizing everything, refining and questioning everything, a big breakthrough for me has been not optimizing for swing, not optimizing for intraday, actually optimizing for intersession. The power that you have as an analyst and a trader in not needing to know where the rest of the month is going to go, in not needing to know where the rest of the week or the rest of the day is going to go. All you need to know is where the session is going to go. Because to forecast what's going to happen by the end of the week, there are so many factors that are variables that are out of your control. There's news releases, there's new price action zones you could enter, a new liquidity, a new manipulation. There's so many substructure variants that could happen. It's very difficult to forecast with precision exactly what's going to happen by the end of the week. But to know where price action is going to go when you have an Asia range, you have a smart money manipulation, you do then an inducement and mitigate a supply and shoot for Asia low, that price action model that I just said right there is so predictable. It's so easy to forecast. It's so easy to execute upon because it's objective. You add a lower time frame model, you add a time confirmation, and you shoot for the next liquidity pool. That can happen all in a London session after an inducement with volatility, and the next liquidity pool, it might reverse on you and then it might do something else. But by then you've already secured your 1 to 3. You've optimized your trading for session volatility. So you're not concerned with retracements and price consolidating and building orders and accumulating. You're just going for the impulse of the session that's with intent, that's grab liquidity and going for the next liquidity pool, align with structure. That is so much more achievable. And it can still give you a high risk reward yield if you have good precision and you understand lower time frame confirmations, that you can get multiple trades in a week, even multiple trades in a day. If you are trading 2 pairs and 2 time windows, you can have up to 3 or 4 opportunities in a day, all of them being reasonably high risk reward. And you have to deal with less emotion because price usually goes directly to your next liquidity pool without consolidating and huge reversals or retracements, which is calming for your emotions. And that, when I optimized my whole strategy for that, not only did it give me easier psychology, easier to understand price action and predict and forecast, but also to be trading the most important move of the day. When you're trading alongside that with time windows correlated, you will have so much more clarity and so much more breakthrough in your profitability. And that's something I'm definitely going to continue to focus on in 2024. Now, my next tip for 2024 that you should be looking to do is learning and understanding the true opportunity of prop firms. Now, I'm not talking about the simple one that you already know, which is prop firms is a great way to get access to more capital and we know that. But more importantly, if you can maximize for session volatility and you understand how to capitalize prop firms, man, that can be so powerful. And I'll explain why. If you have a little bit of savings and you have competence in your trading, I would highly suggest you don't waste time deeply trading a challenge. Focus on your live accounts, focus on the funded accounts, but the challenge itself, think of it as a cost. Let's say I have $10K saved up and I have a proven profitability. I will happily deploy that 10K into funded accounts staggered so that each week I start 3 new challenges, 3 new challenges, 3 new challenges. And I know that my equity curve is up and down, up and down. I might have a losing period, I might have an up period, but I know that some accounts will catch the winning period of my equity curve. Another account might catch more of the losing period. Okay, I blow that account, no problem. Throw it to the side. And then what I realize is over the space of 2 or 3 months, as long as you're not focused on one challenge, you're just having a portfolio of challenges, eventually you'll pass a lot of them, you'll fail a lot of them, and that's your risk to reward or cost of doing the prop firm game. And then eventually you'll reach a point where you'll have $1 million or $2 million in funding accounts. And then I'll do the same thing again. I would link them all to a copy trader and I'll trade intelligently. I'll trade high risk to reward with session volatility, with a reasonable win rate, with sensible profit taking mechanisms. And then that's where you can start to really scale your prop firm journey and really take serious capital from the market, because you're not so focused on the emotions and the power of one. Rather, you have a revolving door. You don't care if you fail one, you don't care if you pass one, you just scale it up, you trade accordingly. When you have decent assets under management, then all you need to do, lock in profit and move on. For example, let's say I have $1 million in funded accounts and I have that across 100K, 100K, 100K. I have 10 100K funded accounts. What I'll do is I'll trade 2 at a time or 3 at a time on a week-to-week basis. I might blow a few accounts here and there, but I know that on a few accounts, I will reach 2 or 3% profitability. So the moment I start on a Monday, by the end of the week, if I'm 1, 2 or 3% up, lock it in, disconnect that from my copy trader and leave it to the side, wait for the payout. Then next week, start a new account. Okay, I had a losing period, throw those accounts away, I blew them, doesn't matter. Then the next week I have a decent week, but not reaching a 2% target. Next week, continue it. Okay, it reaches my 3% target, lock it away, wait for the payout. And I'm just going to be constantly revolving accounts. And the reality is you don't necessarily need to be the most profitable trader with the smoothest equity curve. It doesn't matter. As long as you can capitalize on the system by intelligently maneuvering your accounts to know that the moment you've made a decent profit, lock it away, wait for the payout. If you blow accounts along the way, it's not your money. It doesn't matter, because as long as you make 2 or 3% here and there on a few of these accounts, your risk reward of what you've paid to the prop firms and what you've withdrawn will be profitable over time. And that's a major strategy I'll be using in 2024. And my last advice and my last tip will be enjoy the journey. Now, it sounds cliche, it sounds cringe, but listen to me, hear me out. We are also focused on the objective. We are also focused on the outcome, which is, let's say, to be a profitable funded trader that trades full-time and makes a regular income. So great goal to have. It's a wholesome goal to have, but we are so also fixated on that objective that we forget the beauty of learning. And to be honest, I've reached a good stage in my trading career now. I've been doing this for so long. I've been full-time for so long that for me, it's now reached the stage of autopilot. Of course, I love it. I love trading. I'm obsessed with trading. I love looking at the markets. I enjoy every moment of my trading career. But the moments I enjoyed the most were not these days where I have models, I have plans, and I just have to execute on what I see. My favorite years were in those years where I was uncertain, where I didn't know if trading was going to work, where I didn't know if this was a scam or if this was real, where I was learning and having breakthroughs and having those exciting moments where I thought I'm really onto something and testing it out and seeing breakthroughs and then trialing it out and testing it and split testing it, putting it in a live account, then refining it. That process where I was doing with Wally and Alex, daily Zoom calls, those moments were so happy for me. That's where I really had a fire. That's where I really had joy. And those are the days I miss. Now, financially, I wasn't doing too well back then. And now I'm definitely doing better. But enjoyment-wise, fulfillment-wise, drive-wise, those were the days where I look back and I speak to Wally and Alex, man, those were the days we were hustling, we were grinding, we were having breakthroughs, emotional moments, low moments. That whole process was so much fun. And they usually say you can only appreciate the highs once you've had the lows. So enjoy every single moment. And that's exactly what I'm going to do in the coming year. I'm going to keep refining. I'm going to keep testing. I'm going to keep improving. And I'm going to keep having breakthroughs. I'm going to keep having low moments. But I'm going to feel all of those emotions. Enjoy it all, because I know in 5 years' time, I'll look back on today and say, those were the days, man.